We think Google is reasonably priced. Let's get into it right now. Mo, we love Google. This is part of the Magnificent Seven. Everything skyrocketed last year in the Magnificent Seven. This company hit a low of $88 in the last 52 weeks. $88. I think it hit $83 at one point, and I was the idiot who didn't buy. I was a moron. Why? My price at the time was $80, but I think you're going to see now that's with margin of safety. So you might be confused. Wait, Paul, I thought you said it's reasonably priced. It's at 144 now. How is that? Well, things have gotten better for Google. My assumptions have gotten better. And I look at Google and think to myself, what am I willing to pay for this company? What is the real number? So let's take a look at some high-level things. Mo, market cap, 1.83 trillion, enterprise value. You know what I love about companies these days? I think companies these days are getting smarter about debt.
Yeah.
Don't you think?
Yeah, well, also times when things get rough out there. I mean, look at October. That probably made a lot of companies that had a lot of debt go, oh, man, we should probably manage this a little bit better.
Well, yeah,
it's
plus
not all really good times out there.
And plus, what does Google, they don't need to borrow money. They don't need to borrow money to build it. It's not like we're building factories in 1920 to build something.
And look at the amount of cash flow they have.
Look at this cash flow, $77.6 billion in the last year.
Why carry a large amount of debt?
Yeah, just pay off the debt.
Yeah.
Their 5-year free cash flow is $54 billion, and their 5-year net income is $54 billion. So this is a company that's selling for a high PE of 27, but is it a high PE?
High? I don't know.
I mean, you look at Warren Buffett. He bought Coca-Cola starting at 30 PE, saying people aren't giving up Coca-Cola. Are people giving up Google? Remember,
and if I had to make a comparison, Google is more ingrained in the lives of most people than Coca-Cola.
Maybe you're right, although I'm addicted to Coke Zero.
You might be the only person that drinks Coke more than uses Google.
Oh, let's think about that for a second.
And Warren.
No,
Warren
I think
doesn't use a phone.
Warren does not use a phone at all. He does not use the internet. Guys, 56% gross margin. They're the two largest search engines in the world are Google and YouTube.
Yep.
The very channel you're on right now that Google paid $1.6 billion for 17 years ago, and now it generates $2 quadrillion every second for them.
Yeah, it's crazy.
I saw something yesterday that said Mr. Beast had more views than the top shows on Netflix last year. Whew. Mr. Beast has 240 million subscribers or something.
Wow.
Mo, if we got to 240 million subscribers, would we be dangerous?
Yeah, I probably wouldn't use Netflix anymore.
I'd walk around we get those glasses we always see at Versace and just walk around throwing things at people. Get out of my way.
The shields.
Yeah. So let's go check out Google's growth and the income statement here, guys. Oh my God, look at this growth, Mo. 63 billion, 71, 8. This is only 10 years, guys, and it just keeps growing. $300 billion it did in the last 12 months.
This is actually one of the few companies that had an extremely large jump from COVID that is continuing on.
That's stabilized with it. Yep.
And very strong stabilization.
Yes. Guys, It's all about the ads for them. They make here's what's so great about Google. So guys, I did Michigan football clothing, Go Blue, won the national title. Thank you very much. Here are the sponsored ads. Right here, 85% of clicks go to the first 3 links. Google owns those 3 links. They tell you, hey, listen, if you want to do it. Now, here's what's great. They could charge less for this one than this one. That's how wonderful Google is. You would think better location, higher cost. That's not the way Google thinks. This is what makes them incredible. They want you, the user, to have such a good experience that if these people who have the first ad do such a great job of making sure that what you searched is on their site and you stay there, they're going to charge you less money as an advertiser. Same with YouTube. They want to make sure you stay on YouTube. They're going to reward us when we have a video that has people staying on longer. So please stay on longer. But that's the point here. That's what Google's so great. They focused on the end user and said, if the end user likes it, we're going to charge the person paying for it less money. Think about that. What a brilliant way to do business. And that's what makes things different for Google versus everybody else. So going back to Google here, just incredible growth on profit and revenue. Let's look at their 8 pillars. Just like everything else, is this too expensive, Mo? I don't know.
I mean,
this is the 5-year PE and 5-year price to free cash flow.
If I had a group of 5 stocks that you told me that I had to quote unquote overpay for,
this would be one of them.
Say pay a 35 PE for, this would probably be one of them.
Yeah, because I look at the world going, how many people in the world still don't even use Google yet?
Right.
Now you have China, which bans Google and all these things, and I get that.
But even forget about them. Think about India.
Africa
Probably doesn't
India.
use it. Yeah.
They are growing like
I
crazy.
mean, use it on a mass scale.
So I look at Google saying it's going to be hard for Google to be overtaken. That's what I think. They do such a great job of making sure it's about the user experience. So that's a great 8 pillars there. Let's see what analysts are saying. Look at analysts. They're doubling their profit estimation almost in the next 4 years. Double.
Yeah.
So they have a 35 PE now. The 1-year PE is 27. If you're willing to pay that, it'll be 13.5 or 14 in 5 years. Is that reasonable? I don't know. Might be. Because look at their revenue growth. Still almost double digits every year.
Look at that. They're going to get to $500 billion.
According to analysts who have a bias involved as well, but we like to show that here in our software just as another perspective.
Yep.
So, Mo, what is Google worth to us?
Let's see here.
When did I do Google last?
Good question.
I did it last on December 14th.
Sounds.
And I put a little bit of margin of safety in this one.
Did you?
Yes.
Let me see how much.
So look at first off, their ROIC is growing.
Yeah, that's great.
They're getting a better return on the capital invested in the business as they grow. I put revenue growth of 5, 8, and 11%.
I did 4, 7, and 10. And I think I wanted to go really conservative all the way across the board on this.
Okay, good. Profit margin, I did 22, 24, and 26.
I did 20, 23, and 26.
Okay. 20, really, Mo?
Yeah.
Okay.
I told you, I really wanted to beat this thing up to see, like, what is it really?
Okay. Free cash flow, 22, 24, 26.
And 20, 23, 26.
PE and price of free cash flow in 10 years. I put 20, 23, and
I
26.
did the same.
Because this can be such a big company, I can pay a premium. Now, for my return, I put a low side of 9%, a middle of 10.5%, and a high side of 12%.
I'm going 9, 10, and 11 with this.
Now, guys, 2 things before we show you our prices. First off, Mo's going to show his first. I'm going to show mine second. And then secondly, after this video, if you're interested in our software, there'll be a video explaining the benefits of the software for you as a user. Make sure you watch it. So I hit the analyze button. My prices are a low of 110, a high of 200, and even with a little bit of margin of safety, 147. Mo, what do you have?
92 on the low, about 200 on the high, 136 in the middle. Could be there.
This tool is awesome for that. Guys, go check out our next video.